Let's talk about dollar weakness, shall we? Because up until a few moments ago, we had more substantial amounts of dollar weakness. That seems to have just flattened a little bit. But bring us up to date on your dollar thoughts.
Yes, on the show last Thursday, I warned that I thought we might get a short squeeze in the dollar in the low liquidity weekend. I was 100% wrong. My team was right here. I should have listened to the majority here. They said, you know, the dollar can't bounce much. And in fact, when we got that much more aggressive Trump attack on Powell, it's really seen, in fact, the dramatic squeeze in the low liquidity was actually for dollar weakness. We've taken out a bunch of barriers. We broke 140 in dollar yen. So in fact, the squeeze in low liquidity was the exact opposite direction of what I warned on Thursday. I still think that the long-term trends for this year are very, very clear. We've talked about this since January. It's the end of US exceptionalism. It's going to be a long-term dollar decline, but these things do not happen in a straight fashion. I think it's going to be a large dollar depreciation we're going to see over the coming months and years, but yet this is mainly about a capital outflow story. There are trillions of dollars to come out of the US and find new homes. There aren't obvious new homes. This story is going to play out over months, if not years, and therefore I do get worried when the move gets overextended. So at the risk of making the same mistake twice, on Thursday I warned that there could be a short squeeze into low liquidity. I am still worried that in the very short term the dollar weakness is slightly overextended, but again the long-term trade is very clear. Dollar will decline further, just maybe not in the short term.
Let's get another Cudmore call. Gold. Where next?
Look, that is a move that is extremely stretched and again very logical. I think this is the thing I'm going to keep on repeating probably all year. The long-term trends themes are extremely clear. It's how you trade short-term around them. I understand why people are rushing into gold, but the gold-silver ratio is just so extraordinarily extended. It is now at that point where you've got red flag to kind of look for when does this correct back. Now it can correct back either via gold retracing a bit or silver getting a bit of a boost. I think, in line with my views, that I'm a little bit worried that the dollar weakness has gone a bit too much in the short term, that maybe today that the extraordinary move we've seen in gold in the last few days might have been a little bit of a short-term blow off top, and we can actually see gold pull back a little bit here in the short term.
So if this dollar strength is going to continue, Mark, you've got lots of analysts saying that several of the dollar crosses are oversold. Which ones are they for you? You've got the euro-dollar 115 right now, yen back at 140. Where should we look?
So I think that dollar yen is one that's definitely ripe for a bit of a squeeze. And I think it's important to emphasize that the dollar yen story has been really about the dollar. It hasn't been driven so much by the Japanese side. I think the euro dollar story is much more structural. As you know, one of my long-term views is that euro dollar goes to 130 before 104, which we've been kind of talking about the last couple of months. But given it's done like 10 big figures recently, I think that can pull back a bit, but it will not pull back far. I think that the important thing here is that any dollar bounce won't go too far because there is a large part of the world waiting to sell into any bounce. Reserve managers everywhere will hit those bids if it bounces more than 1% or so.